All right. Welcome to another episode of Wall Street Rundown. We'll miss you guys on Wednesday, y'all. I'm your co-host Billy. I have Wale with me. What's up, Wale?
Good afternoon, everyone, or good evening, depending on where you're joining us.
Yeah. Good afternoon, good evening, man. This market has been, I know you and I were talking about a little bit. It's been nobody knows what the heck is going on, which direction we're going. But here's a quick recap for Friday, May 23rd, 2025. The stock kind of declined a little bit today. We saw some drops even from yesterday going into today. Yesterday, we see the bond yield go up. So that caused kind of the market to sell off. And then this morning, right before the market opened, President Trump announced 50%. He said potential 50% tariff. Bro, I thought we were done with the tariff crap. I was like, all right. Did you sign a deal with the EU? Remember, we just talked about this like, what, two, 3 weeks ago?
Supposedly.
Damn, I was like, what are you doing? But yeah, 50% tariffs on European imports and 25% tariff on foreign made smartphones. That's another thing, man. Apple is potentially going to get hit with a crazy tariff if they don't move their supply chain to the US. And there's some talks. I mean, we talked a little bit about this is if they did move the supply chain to the US, the iPhone might possibly go to like $5,000. I ain't paying no $5,000 for no goddamn phone. Oh man, the S&P was down 0.7% today. This weekly loss of about 2.6%. The Dow Jones was down 0.6%. The Nasdaq was down 1%. The Russell was down 0.3%. But year to date, all major US index are back in the negative territory, with the Russell down more than 8.5%. That is crazy. Like I feel like we were going on a good trajectory like 2 weeks ago.
I
But we're
know.
going back. We're going backward again. So let me get your take on all this crazy stuff that's happening, bro. This week has just been insane.
So I've been trying to get in touch with institutional money managers that I know in my network and just talk to them and just ask them, yo, what are we seeing and what are we missing? And everybody has the same answer. It's we don't know.
Nobody
And
knows.
everything that they look at that looks like, okay, we might be in the clear, then we get something that kind of sets us back again. It's almost like one step forward, two steps back. So
More
this
like 10
week,
steps.
so this week we had, I think it was Wednesday, right? We had the
Mm-hmm.
20-year bond auction that people said did not go too well,
Yep.
which sent stocks lower like quickly.
Right.
And what I'm being told was that the demand that's usually there for these 20-year bond auctions wasn't really there, and
Mm.
that institutional investors and foreign investors were demanding higher yields for those bonds, mainly because one, the US credit rating was downgraded for the
Right.
third time from Moody. So again, if your credit rating is lower, right, you're going to have to pay more interest because your credit worthiness is questionable now. I mean,
Right.
it was
Right.
only it was only one like tick down, but regardless, right, it was down. So that shook the markets. We saw the 30-year go above 5%, hit 5.1, the high this week. And then we saw the 10-year go up past 4.5. Then today we get Trump telling Apple that they got to make their phones in the US, which is not going to happen. And then we got the secretary and Trump talking about how the EU is not negotiating in good faith. So
Mm.
now, right, we got a 20 VIX and the market has now gone into that uncertainty mode now with
Again.
all of these looming headlines into a 3-day weekend. The budget is going through as far as whether or not it's going to get passed through the House and the Senate. We don't know. We're still waiting on that. So right now, it's just there's a lot of things that are up in the air as far as the overall market is concerned. So right now, to me, as a trader or an investor, you just have to be patient and just wait for again the dust to settle.
Yeah. 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 I mean, we see the 10-year treasury yield fluctuated between 4.43 and 4.62. I mean, that's still kind of high.
That's high.
And then the 30-year yield reached a high of 5.05%. I mean, that's just like that's a lot of concern, man. I
And
mean,
the
and And the Fed said they're not going to look into this until the what is it? Okay, so when it comes to the bond, there's the first auction, then there's the secondary market auction, I guess, that they do. But it looks like the Fed is saying like they're not looking even at the primary auction at all. So they're not even looking at it. So I don't understand how does that work.
So the primary auction is you being able to buy directly the from the Treasury Department, from the government.
Mm-hmm.
Anybody can participate into this. You know, if you go to dang, I forget the website where you can buy treasuries directly, they'll
Mm-hmm.
tell you when these auctions are happening, and you can put in a bid on whether or not you want to buy treasury bonds directly from the government. After they get the auction goes, then they start trading on the secondary market. And that's where sometimes the federal government will start to either take liquidity out of the market or inject liquidity into the market based on their open market, um, based on their open market, forget what the word is, based on the transactions that they make on the open market. So either they take
Okay.
bonds out of the market and inject cash, or they put bonds in the market and take out cash, depending on what they want to do. So right now, I think what they're saying is that they're not going to do anything right now. So they're probably just going to stay put.
Yeah. Yeah.
Another thing, and I talked about this a month ago, I was like, the bond market is telling us something that we're not
Mm-hmm.
necessarily really reading. And the thing that I keep looking at is yields are going up, but the value of the dollar is going down.
Mm-hmm.
I think the dollar value has hit a low that we haven't seen in about a year, almost maybe 2 years.
Yep.
Those two things are usually not good things if they're happening at the same time. So I've been watching that, and like again, a lot of institutional money managers are like, yeah, that's not really what we
That's
like
not
to
good.
see.
Yeah. Yeah.
So um that's I don't want to say everything is sort of like doom and gloom, but there's something going on that has not come into fruition
Yep.
just yet.
Yep.
I can't
Yep.
put my finger on it, but I have to be cautious and continue to watch what the market is doing. So,
Yep. I mean, I'm looking at a lot of charts, even though we kind of moved into positive territory for the year last week, I think, or a couple of weeks ago.
mhm.
We didn't really take any highs of all those stuff.
No.
Like, you know what I mean? We kind of come close. We kind of create like a higher low, but it didn't really create any like we didn't go above like any of the highs and stuff. So
Nope.
which is kind of concerning because again, I'm seeing a lot of selling pressure that's coming through. So what does that mean? I mean, we're probably seeing that in the bond market now. That's kind of like what's pushing the market down a little bit. So
Yeah.
it is a concern though. Like it's a big concern. Man, I need to drink some water. But in any case, how should people approach this? Like, you know what I mean? It's like that's kind of like it's kind of those hidden things, right? It's like
Mhm.
you can look at charts all day, you can look at all that stuff all day, but we all know it's like when news come up, your whole theory of your whatever setup you have is
Mhm.
out the window, you know?
Mhm.
So what should people focus on going into the next couple of weeks? Because those numbers are still high. So we're not really in a good territory just yet. Now, can the market go euphoric and go up despite of this? It can, but
Mhm.
is that possible? I'm not sure.
I would not be surprised if we sort of traded sideways, right?
Mm-hmm.
I know NVIDIA earnings are next week, and
Yep.
because it's such a big piece of the index, we'll have to wait and see how the market reacts to those earnings. And that's something that I guess people have to stay put for. As an investor or as an investor, I would be very hesitant to deploy any new cash into any investments at this point.
Mm-hmm.
I would be patient, and I would just be staying put to see what transpires over the next couple of weeks.
Yep.
I was looking at a chart of the dollar, and I'm looking at a 3 year chart. I mean, the dollar last week hit its lowest point in the last 3 years. And then if you look at the monthly calendar of the dollar, we got a nasty inside shooter on the for the month of May. So I don't like that. So if we see a weaker dollar plus higher yields, those two combinations are usually not a good thing for the market in general.
Right.
And another thing that I will keep hammering on is the the tariffs that everybody is expecting, right? From what I'm hearing, most people are expecting to see some of that transpire in like Q2 and Q3. So as we move into Q2 and Q3, the inflation data will be very, very important. And then also to the unemployment data would be very important.
Right.
So what some people are afraid could happen as we get into summer is that inflation, and I think I talked about this too as well, inflation and unemployment go up at the same time.
Mm-hmm.
And the Fed has to make a choice. Which one do we try to solve right away? Because
Yep.
remember, they have two mandates, and raising rates doesn't
Hmm.
help both mandates, and lowering rates doesn't help both mandates. So that's a very tricky situation because if you raise rates
Absolutely.
because inflation is going up, that's going to hurt employment.
Mm-hmm.
If you lower rates and inflation is going up, that's going to hurt the consumer. Because again, you can't beat inflation by lowering rates. So if we see that transpire in the summertime, that is going to be a very bad combination. And some people, I think if you listen to what Jamie Dimon talked about during their investor day this week,
Yeah.
JP Morgan is saying, hey, that could happen. We're not taking that off the table just yet.
But even
So
with JP, man, remember like a couple of weeks ago, whatever, they kind of took away their, recession thing. They kind of
that's true.
they
That's
revoked
true.
their opinion, but now they're back paddling again. The same thing, how kind of like Jamie is actually like he was against Bitcoin, but now he's like, oh, our customers can't buy Bitcoin. Do you understand what I'm saying? Like you
Got you.
you really cannot believe you can't make your investment based on what these guys are saying. You know
That's
what I
true.
mean?
That's
It's
true.
just it's crazy.
Yeah. So there's a lot of I'll be honest with you. Even some of the smartest people out there, at least that I know personally, they're just as like
Confused.
we're just as confused.
Mm-hmm.
There are so many varying opinions about where the market is headed, and usually the industry there's a lot of usually some unison there,
Yeah. Yep.
but I don't know. But a lot of I will say this: there are one consensus though that I'm hearing is that don't buy too much into the Trump threats, right?
Mm.
I think that that's something that people have been saying. Um, Financial Times actually came up with an acronym called TACO.
Taco.
Trump always chickens out.
that's
So
that's
there's
that's
so
that's
they're
that's
saying whatever he's touting about tariffs on the
that's
EU,
disrespectful. I'm sorry.
yeah, they said whatever tariffs he's touting about the EU and Apple, he's gonna chicken out.
That's disrespectful. Taco.
So
Wow. I mean,
so
we've seen it though. We've seen it like
correct, we've seen
tariffs,
it.
no tariffs, 90-day delays, 60-day delays. Oh, 10%, 30%. You know what I mean? We have seen it, right? I think again, I go back to what you said before. Like he's using tariff as a negotiation tactic. You
Correct.
said that over and over, but I was like, I really think that's what he's trying to do to kind of bring people back to their knees so they can
Mm-hmm.
negotiate a favorable whatever it is that he's negotiate. But I mean, there's other motivation too, but I ain't gonna talk about that because it's borderline conspiracy theory. But we're gonna keep that. We're gonna keep it professional.
And if we look at the market, you can tell that today, right? We gapped down today, but we didn't close at the lows.
Nope.
Like there were still buyers there. So I think the market has gotten to a point where it's just like, oh yeah, we've seen this before.
Yep. 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 And a lot of those things are like algorithm, right? So it's like they hear bad news, tariffs, whatever, the market just sells off. And
Sales, yep.
then
Mm-hmm.
yeah, and then they come back and buy it back up again. So
Mm-hmm.
I mean, it's just something that happens all the time. So
Yeah. And
but
if I just from a technical standpoint, if you look at where ES futures, so S&P 500 futures bounced, it bounced right at that 200 EMA
mhm.
on the nose. And if we look at the NASDAQ, not quite the 200 EMA, but it did bounce near into a bullish fair value gap this week.
Yep.
So
Yep.
until we lose that level, I don't know. I can't say either bulls or bears are in control just yet. I'm on the neutral side where I'm just think we could just trade sideways for a couple of days.
Yeah. But if you go into the lower time frame, like even the 4 hours, even the 1 hour, we are creating lower lows as we
That's
go.
true. And
So
lower highs
and
on the 4 hour, yeah.
mm-hmm.
Actually, even
So
on the daily, you can kind of see higher lows as well on
yep.
NQ and ES futures. Yeah, we're creating lower highs. So we are 1, 2, 3, 4 days straight of lower highs and lower lows.
Yep.
So yeah,
So something's happening. There's some sell-off happening, definitely. There's some pressure going on. So
yeah.
um the way I look at it, we didn't close above yesterday's low. So that's
Mm-hmm,
for me, that's kind of concerning too. It's like, we didn't really bridge that became like our resistance, right? So it's like
mm-hmm,
we are definitely not in a good territory right now in the short term, I would say.
yeah. I would be
So
saying that if we lose the 200 EMA again, and then the
oh
200 EMA or SMA, either one, I have both on my charts because they're pretty close. If
mhm.
we lose any of those levels and those levels become resistance, I think we're headed lower.
Yep.
So that
Yep.
will be what I am looking at is that if those levels we breach those levels and then they become resistance, then that's when I'll say, okay, yeah, we're in trouble.
Yep. Yep.
So
Yep.
that's what I'll be watching at, and I think everybody should have that marked on their charts.
It is definitely going to be an interesting couple of weeks coming up. So keep an eye on the charts. And yeah, we'll see what the market do next week. I mean, we have a short week next week. Remember, Monday there's no
Markets are
market,
close.
so don't log in and see why the chart is not moving and be frustrated with yourself. Let's move on, man. The nuclear, bro. Aklo, bro. Aklo, bro. We've been in since like $5. That is ridiculous. Aqua is hitting them near $50, I think. Ooh, how far did we get today?
I don't know if we closed at 50, but I know we did hit above 50
We hit
today.
52 high today. The highs. We
Yeah,
haven't gone to the
52.
59 just yet. Yeah.
Yeah, we hit
Yeah.
52. We closed at 48.87,
Yep.
but yeah, we are
She,
in good shape
that is crazy. If you've living under the rock somewhere, we've been talking about Aqua since last year. Wale
since
did
last
his
summer.
research and found that stock when it was still at $5. I think we went even back to like $4, I think, and then we came back and then we went back down, and now it's just like, I mean, we are moving really good. So if you've been in since $5, you are definitely making some good money right now. But Trump have signed an executive order to help clear the way for nuclear power development. Now, what does that mean? It means that they are making it easier now for nuclear plant to be actually created. According to his word, he says a hot industry is a brilliant industry. Mr. Trump said that nuclear power before signing the executive orders. Now, what does that mean for some of those stocks that are actually in the nuclear world? So I'll let you kind of explain that a little bit, with the SMRs and stuff. I feel like we talked about this like 2 weeks ago, maybe last week. So I'll let you kind of take over from that and kind of explain it to us.
So just to give people an overview again of what's really been going on, the demand for power is getting higher with the need for more data centers to power all of these AI, the AI demand going into the next couple of years. Building an entire nuclear plant takes a lot of time. So there are some companies out there that have developed these reactors. They're called small modular reactors that can be built within a reasonable amount of time to help power some of these data centers and even help build some that can be located in very remote places. The two companies that I'm most familiar with are Oklo and SMR, right? Um, they both develop small modular reactors, but I think that they cater to different types of companies. So I think the one that Oklo develops is a little bit smaller, and um, they can develop power to places that are in like remote areas. I don't think SMR has the same technology. Their SMR is a little bit bigger. I have to go back and double check the details, but very similar. So with those companies developing the technology to power some of these data centers, the demand to me is still there. Now, that doesn't mean that people are going to pivot away from traditional electricity supplies like natural gas and standard utility on the grid. But to me, again, I've been saying this, I don't think that the current grid, right, that is constructed in the United States can handle the demand. So there has to be some sort of alternatives. Nuclear is also considered clean energy, right? So with all of that being said, there is a demand for that technology. And again, as these companies continue to move along, I think regulation was going to be a big hurdle, and it looks like we're above that hurdle. So going into 2027, 26, 27, 28, as we start to build more data centers, I really like where the technology is going. So with a $6.11 cost basis, I cannot be mad.
I mean, we talked about this too. It's like, eventually, I think in terms of sustainable energy, in terms of
Hmm.
clean energy, as long as you don't F it up I,
Exactly.
and cause a nuclear meltdown,
Exactly.
I
And I
think
think, go
I
ahead.
think it's a good source of renewable energy. I mean, long
Hmm.
term at least, And I think the B2B is fine, but once you actually can figure out how to do B2C, I think that's gonna kind of change the whole game, right? If
Mm,
you can actually like kind of like when we talk about like the smaller module or you can power your whole home with, put it in the
hmm.
garage somewhere, put it in your home somewhere. We talked a little bit about that and the potential for that. I think whoever can figure that out first, they are definitely going to take over the industry,
Yeah.
right?
I,
So
I
I,
think for
I
now, the nuclear story is mostly going to be for like commercial
commercial, yep.
rather than residential. But if they
Mm-hmm.
start to pivot into residential, that could be something that, especially for rural areas, right?
Yep,
Rural
yep,
areas, that could be something that could happen. I don't know if that's on the horizon,
yep.
but if the technology is there and
That's
it's
a game changer.
clean, that's a game changer. So we'll see
Mm-hmm.
who potentially could be the first one to start that type of business. But yeah, the demand for me, the demand for power, that if you miss anything about this whole AI story, just know that the demand for power is one of
Yep.
the number one, I'd say the number one most important thing after chips.
Yep. 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 Absolutely. How to keep them powered, how to keep them cool, all of that
Yep.
stuff.
Yep.
You need that. And like you said, the current grid that we have. I mean, look at Texas. I think let's Texas do what do they call them? Scheduled blackout or something like that. Like I
Oh
think they do
yeah.
like a rolling blackout where they're
Yeah.
trying to
Because
conserve energy.
because
So
the grid can't handle it.
yeah, there's just too much power being taken out. You know what I mean?
Hmm.
So
And you got to
um
understand that data centers run 24/7,
24/7.
365. They don't shut down.
It's a problem if they
So
shut down.
yeah, it's a problem if they shut down. Exactly. So if they shut down, and then now you've got other countries that are trying to build data centers as well.
Yep.
So yeah, I will I will ride this Oklo story until the wheels fall off, or if the technology just doesn't work.
Right, right, right.
That's the one thing that will get me to get out of the trade if the technology just doesn't work. But until then, but I will say that I will encourage people to read up on the technology. SMR technology, I think, will be a game changer going into the future.
Facts, 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 facts. But yeah, if you're an outlaw, man, I know you eating. I know your stocks, your portfolio look nice right now. It's one of the only stocks that probably did really good today this week, at least. Well, except for maybe Ion Q in the quantum computing. I had no idea until you text me to look at it. I was like, whoa, what just happened? You know what I mean? If quantum computing, I mean, I've always disagreed with when Jensen Huang was like, we're 10 years away, we're 20 years away from
Hmm.
quantum computing. Like, I was like, nah, bro, we are not that far away. If you keep track of technology, how fast technology moves, and again,
Hmm.
I talked about how we go from 808 to cassettes, from cassettes to CDs, from CDs to streaming on
MP3.
to MP3, from MP3 to now, streaming online anytime. If you look at the time it takes for each technology, it gets shorter and shorter and shorter and smaller and smaller because every technology builds on top of the next, right?
Mm-hmm.
Quantum computing is going to build on top of AI. AI is
Yep.
here already. So it's like,
Mm-hmm.
it is not going to take us too long to figure out what to do with AI. I'll probably give AI maybe another 2 years. We're probably going to figure exactly what needs to be done with it.
Mm-hmm.
And at the same time, we already have companies who are trying to develop quantum computing. So it's like all of those things build on top of each other. So I mean, I don't think we're 10 years away. I think Jensen was just playing around because he probably want to be one of the first ones in there. And he's sort of like, don't worry about it yet. Just don't worry about it. Nah, I don't think we're that far away. So
Mm.
IonQ actually ran on Thursday. So talk a little bit about that. I know you kind of talked to me about like why that happened.
Yeah, so I heard the CEO today on CNBC, and he's telling people that they have the most advanced technology when it comes to quantum, and they also have the best networks about how these chips communicate with each other. So he
Mm-hmm.
made a statement on Thursday that they wanted to be the NVDA of quantum. And when he said that, the stock just went crazy. Like it was up, I think 45% that day. So that's a big claim. I don't think it justifies the move. I don't know about a 40% move in one day. But I don't have enough information about quantum to really know how far the technology is away from having a consistent use case that can be developed and used on a consistent basis. For AI, we at least have use cases that people are using on an everyday basis now, right? Quantum, I know the technology is there. I know there's a lot of people that are developing quantum. I mean, you got the smaller players. You've got, let me actually pull up my quantum list and just give you guys a list of companies that are. Did I delete it? I might have deleted it. But you've got IonQ, you've got Rigetti, you've got QBTS. There's a few others out there that of the smaller players. And the big players, you've got Google, you've got Microsoft, and then you've got IBM are the three big players that I know of that actually are developing quantum chips. The use case that I know is coming that a lot of people keep talking about is healthcare and drug discovery, right? Because quantum will allow you to solve problems at the speed of almost instantaneous stuff. So that's I know a big thing that if quantum can do the things that it needs to do in the drug industry for drug creation, that's going to be a huge game changer. So we'll just have to wait and see when we'll get a consistent use case. But right now, all we know is that the technology is in development.
Yep. Yep.
I
Yep.
don't have any skin in the quantum game yet. I probably missed the IonQ move because if you look at IonQ is pretty much done the same thing that Oklo has done since last summer. I mean, you're going back to a stock that was trading at like $6, hit a high of 54, came back down to about 23, and now it's trading around like 45. So, we'll see. Um,
Yeah, it is
Again,
going to be
I
interesting.
think there's still a lot of speculation of what can be done with the technology, but just know that it's in development. And that's something that you should probably keep an eye on because, as you said, once AI becomes like the standard, kind of like how the internet became the standard, then quantum's going to build on top of that.
Yep. Yep.
So,
I know one community that's really scared of it. I've been reading a lot about it. Is the Bitcoin community. The reason why is because with each Bitcoin there's a secret key. So you have your private key, which is the key that you only know, which is they call them the wallet, right?
mm-hmm,
Quantum computing has the potential to be able to solve and crack that private key in less time. Today, we do have some form of quantum computing right now. It's just
yeah,
not fast enough. It's very slow. It's probably taking hundreds of years to even crack one wallet. Now,
mm-hmm,
if quantum computing is starting to be bigger and faster, it has the potential to solve those cryptic keys, right?
mm-hmm.
And now that introduces a whole slew of security risk on everybody who owns Bitcoin. That's I would say that's one of the biggest threat right now. And of course, I don't got to tell you guys, like, you got to start looking at what new cybersecurity company is going to come out that's going to be dedicate themselves to quantum computing security against all the
Mm,
stuff. So when those companies start popping up, I think that will be a good company to invest in. Or even the current cybersecurity companies that we have, if they start talking about quantum computing security and all this stuff, because you got to think about it. The same way quantum computing can be used for a good thing, it can also be used for a bad thing. I mean,
can you imagine if somebody like China like develops like
exactly.
this is my conspiracy theory. Let's just say a country like China is winning the quantum race, right? And they create a key and they just
Yeah.
turn the whole network off.
Yeah. It is possible. It is possible. There's a movie that I watched where there's literally well, I don't know if it was fiction or not, but it's like there is literally a mathematic formula that if you can code it, it will break every single algorithm. It will break every single encrypted message, secret key, all that stuff. Because you got to think about it. All of this is just formulas.
Yeah,
You can add another extra letter. You can add, we have the RSA, we have the SHA, all these different little encryption that you got to do. But it's like they're all just adding extra characters or extra, like, numerical, or adding some type of something to like throw you off, so you don't know what the heck is included in there. It's going to take you a long time to fix it. I mean, people have developed some really, really, really good application. If you're in the cybersecurity world, there's a lot of uh applications out there that if you're really good at learning it, you can really break into somebody's information. Like, I can tell you guys how easy it is to get into somebody's Wi-Fi. But I ain't gonna tell you guys. I wish you guys get a problem, but it is very easy for me to steal your Wi-Fi, and I can do that in less than 2 minutes. You know what I mean? But if we can do that with those things that that's easy, imagine now we have quantum computing and be able to build on top of whatever we have. AI right now is allowing criminals to be able to do a lot of things that we didn't know they can do back in the day. They could do a lot faster, more efficient, and be able to solve issues too. So now companies are actually like incorporating security against AI, how to recognize it, how to understand, how the software is made or how, coding is made. So it's like now you got to build on top of that. Now quantum computing is going to introduce a whole other slews of problems. Now, guess what? Whatever company that's going to find solutions to those problems are the ones that's going to be able to make money off of this too. And I would not be surprised if it's the same exact companies that we talk about all the time when it comes to cybersecurity, Palo Alto and all those different companies. Those are the companies you got
yeah.
to pay attention to.
Yeah, Palo
Um,
Alto reported this week earnings. I
oh
know
yeah,
the
they
stock
drop.
was down, but
Yeah.
it did not close at the lows.
Yep.
And I think it's at what, 186.
Mm-hmm.
But I just looked at CrowdStrike, and CrowdStrike is trading at an all-time high now.
Yep. Yep.
And I regret having to sell out of CrowdStrike because I bought CrowdStrike last year. Oh God, I am kicking myself. Remember when we had that scare on August
Yep.
5th?
Mm-hmm.
I started buying CrowdStrike at 145.
Yeah, because we dropped to
Not
two.
145. Oh, I'm sorry. I'm looking at the wrong one.
We dropped to like 200.
Yeah, I'm looking at the wrong one. Whoops, I was looking at Palo Alto. Let me
Yeah,
see.
back in August, we dropped to like almost 200.
Yeah, 200. So I was
Mm-hmm.
buying around 200, 205, 210. Now
Sheesh.
that thing's at 459. I had
That's
a good
crazy.
run. I sold it for a good reason. Uncle Sam called for taxes in January, so I had to sell something. But I regret that. And I will say this: the AI story and the cybersecurity story, they go hand in hand.
Yep. Yep.
They go hand in hand. So I would, if you're invested in, if you are a believer in the power demand for AI, you believe in the chip demand for AI, and then you should also believe in the cybersecurity demand for AI.
Mm-hmm. Mm-hmm.
I am just trying to see if there's going to be more consolidation in the cybersecurity company because there's so many out there.
Yeah. Yeah.
So we'll start to see if we start to see more consolidation, especially with a more friendly um, administration that's going to be in power for the next, 4 years.
Facts. So that's still coming, man. I mean, we shall see how that's gonna impact everything, man. I feel like we move forward and then something else gonna happen. So we're just gonna keep an eye on what's coming up next. Now, let's move on to some of the retail's earnings. I mean, Target got smacked.
Target Target has bigger problems than they think. And I will not be surprised if the CEO gets let go.
I don't know
I'm
what
t-
he's doing. I really don't
I'm
know what he's
telling you
doing.
right now, it would not surprise me if before the end of this year, I would not be surprised if the CEO gets fired.
I don't know what he's doing. I
Yeah,
really don't know what he's doing. Like
because
he,
they can't figure it out.
no,
They
nope,
can't.
nope. Because they're fighting two wars, and I'll tell you what. They're fighting the war of the DEI. You know what I
Yep.
mean? I mean that's like the traffic at Target. Like if you look at the numbers, it went down significantly. You know what I mean? And it's just crazy. So that's one thing. So you have a PR issue in your hand that
Hmm.
you're not trying to fix by I don't know. I don't know what they're doing about that. That's the for me. That's like the easiest thing you can fix is
Hmm.
let's go out there and do some PR work. Let's get people back into the stores,
Yep.
right? At least if you do that, if you get the traffic back into the store, at least you'll have probably have like one good quarter. You know, maybe you won't surpass your numbers, but you get a lot closer. But if you can't solve that issue, you can't talk about the tariffs. You can talk about potential stuff not being on the shelf. You can talk about prices going up. You can tackle all those things if you can get people in the store. You have so many problems, and I don't know how you're
Yeah.
gonna fix it. I really
Nope.
don't know.
Nope. Yeah,
So
they're getting hit. They're getting hit from all kind of angles.
yeah,
And I think someone mentioned today that their problem is that when you look at their products, they're more of a consumer discretionary than a consumer staple,
yep,
right?
yep,
Walmart is more balanced with consumer staples and consumer discretionary. Same
yep,
with Costco. Costco also has the membership revenue that they get as well. And I also think Costco has a little bit more flexibility when it comes to pricing power.
yep.
So
But
if you,
also, Costco doesn't have to worry about the PR thing because they kind of like
oh
we
yeah,
we gonna keep this. You know what I mean? So
hmm,
that's something. That's one less thing to worry about.
and as long as Costco keep them hot dogs at that price, they're gonna have good PR.
Hey, they promised. They promised. They promised, man.
Yeah.
So
So this is another reason why, again, I look at some companies, right? And you say it's not always good to just buy stocks blindly, right? Because if there's something broken in the business, right, you got a stock that may not recover for quite some time.
for a long time.
So now, if they start to, I mean, I'm looking at Target. Target back in 2022 was $183.
Mm-hmm.
I think in 2023 it sold off to about 100, reclaimed 100, back to 178, and now it's back at 94. So
Yeah.
if let's just say you're an investor in Target, right? And you're holding the stock long term, this is probably not a good chart, long like a good 3 year chart if you're just looking at the last 3 years.
Nope.
Not good. So if you're just saying, oh, stocks are going to go up, stocks are going to go up, and you're not listening to what's going on with the business on these earnings calls, you're basically trading blind.
Mm-hmm.
So I think that at some point, to me, if there's going to be a catalyst that's going to help the stock, to me, I think they're going to fire the CEO. They're going to hire someone else, and that's
Yep.
when they're going to have the whole turnaround story
Yep.
as far as what could help bolster the stock.
Yep.
Because the way I look at it, to me, it's going to fall on leadership. And I think, if I'm not mistaken, the board made him take a pay cut. If I'm not mistaken,
Yeah. I
I
mean,
think
they're
he,
going.
I think he took a pay cut, and I think the
They
next thing they're going to do is take his job.
they're gonna fire his ass because he's not doing a good job
No,
at
he's not doing
all.
a good job. I mean, you just look at the last couple earnings calls, and it's always just problem after problem after
Yep.
problem after problem. First they said it was theft, then it's now it's something else. So when
No,
you have too many problems compounding like that,
it
it's not
ain't
really
theft.
good.
It
Yeah.
ain't theft. You know how people steal from Walmart? They're still making profit. You know what I'm saying? People literally walk out of Walmart with like a bag of something and not pay for it. You know,
Yeah,
like
that's true.
and they're still making money. So it's not about theft. It's
Yeah, if you
about you keeping your customers happy. It's about keeping traffic up high. You know what I mean? Like if you're not
yeah.
doing that, ain't no way.
I mean, just go look at a 3-year chart, compare Costco and compare, I mean not Costco, compare Target and then compare it to Walmart and Costco. I mean, it is a striking difference.
Yeah, yeah.
If you look at the long term,
Man,
I mean, just look at the difference.
yeah, I didn't even realize like they had 1, 2, 3, 4 years of negative stocks. Like that's crazy. So their problem didn't even honestly, their problem didn't start this year. It started in 2022.
It did, exactly.
So they can't really blame this on anything else. But like so yeah, they had a business issue going
And then
all
the
the way
tariffs
back
just
then.
made it worse. The
They just
tariffs
made it
just made it
worse.
worse.
Yep.
And this
Yep.
is why I keep trying to tell people if you're going to buy individual stocks, don't buy broken businesses,
Mm.
buy broken stocks. So there's nothing wrong with the business. The trajectory of what the business is doing is still relatively good. You look
Yep.
at free cash flow, you look at revenue, you look at net income, but the stock is dropping, but those numbers are continuing to climb. That's a broken stock, not a
Mm-hmm.
broken business. Now, when you see a stock where you see net revenues going down, you're seeing, I mean, net income going down, you're seeing free cash flow going down, you're seeing, all kind of stuff's going down. That's a broken business.
Mm-hmm.
So buy broken stocks and don't buy broken businesses. So yeah,
That's a bar right there.
that's a man. I feel bad for Target, man. I feel really bad for Target.
Yeah, I didn't realize like the problem really didn't start this year, man. This
Nope.
they've been having this issue, and you're right. You need better leadership to be able to take care of this.
Yeah.
To be able to take care of this, because otherwise you never going back down, going back up.
I would not be surprised if by the end of this year, the CEO's gone.
Yeah, and I think the stock will run probably.
Yeah. So remember where you heard it first.
Yeah. Oh man, I would not be surprised if stock run back up on that. That would
Oh
be
yeah.
good news for them.
Yeah.
So, anyways, let's look at next week economic calendar. So again, Monday, May 26th. Remember, the stock market is closed. There's nothing going on Memorial Day.
Hmm.
Tuesday, I'm trying to see what we have. I don't see a lot of stuff. Actually, we have consumer confidence report is coming up, durable goods is coming up. Not a whole lot going on there. The New York Fed President John Williams had a speech in Tokyo. I don't know how that's going to impact the market. But Wednesday, we have the minutes of Fed's
From the last
May,
meeting.
yep, for May FOMC meeting. So that minutes are coming up. So just keep an eye on that. I don't know how's that going to sway the market. But then again, Thursday, as usual, we get the initial jobless claim. We have the first revision for GDP. What do you think that's going to do to the market?
That's on the 29th, right?
Yeah,
Yeah, we'll have to see what that does. But that I think that will be a potential market mover.
yeah,
And
I'm thinking that too.
if I'm not mistaken, the next day we also have PCE.
PCE, yep,
Yeah.
yep.
So the tariff numbers have not hit. Now, another thing I've been hearing is that some companies like Walmart are eating some of the tariffs
For now.
for now.
Mm-hmm.
How long they do that,
I
I
mean, they
don't
even
know.
said it. They said it. They're like, we're doing it now, but we don't know how long we're gonna do that. Even I think President Trump was like, Walmart is playing around. They made a lot of millions of money and all this. I was like, okay, yes, they made, but they don't. That doesn't mean they want to eat the cost, like you know. So
You gotta understand that as a public company, you have a duty to shareholders, right?
yep,
And so
yep.
you can't sit there and do damage to the company because somebody's trying to bully you into doing it because of their policy, right? So I'll be honest with you. At the end of the day, Trump may not want them to pass the tariffs on the consumers, but it's up to them. Like he has no control over that. He can say
Mm-hmm.
what he wants, but he has no control over that. So, but people are saying that you're going to start to see higher prices come summertime. Um, and I mean, we'll just have to see how that translates to all of the things that we're starting to see with consumer spending, interest rates, unemployment, all of those things. The hard data is not showing issues yet, but everybody's saying don't believe what you see now.
Don't believe the hype. Yep.
Don't believe the hype yet. Like it has the potential to get worse.
Right.
So yeah, we'll see. I am holding my breath. I'm not going to sit here and say that we're out of the woods. I'm putting myself in a position to be prepared for anything at this point. So um yeah, I will I will be continuing to watch. But the
Yep. Yep.
GDP revision, the first revision, and then PCE, those numbers will be very important next week. So
I think so too. I
yeah.
think so too. But yeah, man. So closing out, any advice for the next quarter we're gonna move into at the end of this quarter? I mean, as a whole, I think we're still waiting for solid numbers from the tariffs to see how they're gonna impact the market and all the stuff. We talked about the bond market, how that's impacting the market potentially. So any advice on how people should move now going into that, this yeah, June is gonna be the end of second quarter.
Hmm.
Yeah, second quarter.
Yeah. And yeah, June will be the end of Q2. Yep.
I mean, any words of wisdom there?
So this is what I would say from a technical standpoint, right? If you are a trader, investor, anything, open a simple platform like Thinkorswim, TradingView, whatever. Mark the 200 EMA and 200 SMA on your charts when you're looking at SPY,
Mm-hmm.
QQQ, ES, and NQ, and watch how price reacts to that level. Because for a lot of institutional high frequency trading algorithms, those are critical levels. Those are very critical levels. So I would have that marked on my chart going into the next couple quarters and seeing if we lose those levels and if it becomes resistance or if it holds as support. As an investor, I would be accumulating cash so that you have the opportunity to potentially deploy that cash into
Again,
good companies if we get another pullback with all the headlines that we're seeing.
facts.
So
Yep.
for me as a trader, what I have been doing, right, is that on days where I have profitable trades, rather than taking that entire amount, so let's just say I make a $1,000 trade, and now I turn that $1,000 to let's just say 1,500. I take that 500 that I made, I throw it into my bank account, and I'm holding it in cash.
Yep. Yep.
I move on to the next trade. Maybe I make $300 on that 1,000. Take that money, put it in the cash.
Now
Now I've
let me
got
ask you this though. Why do you move it completely out of your trading account?
so two reasons.
Mm-hmm.
For two reasons. One, in some cases, if you're not disciplined, as your portfolio grows, you
Yes.
will start to take more risk. And what you're going to
Yes.
start doing is you're going to start putting more money at risk. And all it takes is one bad trade, and you are back
Yes.
to square one.
Absolutely.
Because I've done it before,
I've done it multiple
and
times.
because of my personal situation now, I've had to be a little bit more disciplined.
Yep.
So what I do is I have a dedicated amount of capital for trading only, right? And I have that cut up into half positions and full positions. Once I'm into a full position with all of that capital, I'm not adding any more capital. I am in that trade and I have to manage it to the best of my ability to either become profitable or take a loss.
Yep.
So, because of that phenomenon, because this is how the brain works, right? If you look at your trading account and you have $10,000 in there, you're going to tell yourself, I have $10,000 to trade. If that 10,000 now becomes 15,000, your brain is going to say, I have $15,000 to
15,000.
trade.
Exactly.
So what you're going to do is you're going to start putting more money at risk, especially if you go into a trade that goes against you. What are you going to do? Probably
Oh
average
my
down,
God.
right?
You preaching now.
Average down. And that's how you get in situations where you can blow up your portfolio.
Yep. Yep.
I've done it before. I've done it.
Yep.
I'm not going to
Yep.
sit here and say that I haven't. So now what I do is at the end of the day, typically, now if you have margin, you can take money out pretty quickly. But if you don't have
Yep.
margin, once your cash settles,
Yeah, you can
whatever
take it
you
out.
made on the trade, take that money out, put it towards cash, recycle the amount of capital that you have so that you can continue to wash and repeat. Because If
Yep.
you do that, just like if you have $1,000 account or a $10,000 account, you just know every trade you have the same amount of money at risk.
Facts.
So, and to me, if you're a trader and you're not taking some of that capital and investing it into long-term stuff, you're kind of defeating the purpose
Mm-hmm.
because you're always one trade away from, you know what,
Yeah.
from
Yep.
starting from scratch.
Yep.
So if you
Yep.
take the cash out at the end of each day and you put it into your bank account where it's safe, to me, like this is how I always tell people, your trading portfolio is not going to grow, but your bank account is.
It's gonna grow. Yep.
And where do you pay
Yep.
your bills from? Your trading account or your bank account?
Yep. Yep.
So
Yep.
that's what
Yep.
I would be doing as a trader. That's what I do now. I didn't used to do that, but I've had to adjust. I've and especially when we're in a market that is more volatile, trust me, you don't want to keep putting more money at risk in this market. I mean, like just imagine like yesterday, you're in a bullish position and then you wake up and you see
And it's
the
like it's yeah, everything went south. Yep.
like you don't have control over that.
Mm-hmm.
And I always
Mm-hmm.
tell people, no matter how good of a trader are, no matter what the chart says, what the technical said, headlines, charts.
Yep.
Headlines
Yep.
will always trump charting 10 times out of 10. Period. I don't care who
Period.
you are.
Period. Period.
So, to be honest with you, this is what I've learned in my trading journey. Trading is not hard, right? Because the way I look at it, if you break down trading into its most simplest forms, it's pretty much a 50-50 bet because stocks
Yep.
either go up or down.
Yeah.
So you got a 50% chance of making money in either direction. You just have to know
Mm-hmm.
what side you want to be on. The hardest part of trading is risk management. That's
Facts.
the hard part.
Facts.
That's the hard part. And that's the part that some people aren't able to master, which is why they can't become profitable traders. Because at the end of the day, that all you're doing is you're trying to pick the direction of a stock.
And you want to be right more than you're wrong.
And you
That's
just want
it.
to be right more than you're wrong. And if you
Mm-hmm.
give things time, you got a 50% chance of being
Yep.
right.
Yep.
50-50.
Yep.
You either buy calls or you buy puts.
Yeah. Yeah.
Sideways is another option, but with the VIX the way it's trading now, right in this market, you're pretty much picking a side.
Yeah.
50% chance.
Yeah.
But how you manage risk, that's the hard part.
That's the
And
hard
that's
part.
the part that you kind of have more control over.
Mm-hmm.
And which
Mm-hmm.
is why in my group, I just try to simplify the trading process, right? We want to look at the area where we see buyers and sellers. We just want to be on the right side of where price is moving. That's
Yep.
it. But I
Yep.
can't help you tell you how much you should risk, you know, what type of calls you should buy. Like all of those things you have to decide for yourself. When to get out of a trade, when to stay in a trade. Because I'll give an example of myself today or this week. Um, TLT. I was in TLT
Mm-hmm.
yesterday. I got in right at the point where it started to get rejected.
Mm.
83.80. Nailed it. Perfect entry. Within 5 or 10 minutes, I was up 30%. And I kept looking at 83.55 as the level that it needed to breach before it started to trade off lower and lower and lower. But it kept wicking.
Mm.
It wicked on that level 4 times. So that's basically 20 minutes on a 5 minute chart. I had 20 minutes to think about whether or not I was going to stay or get out of the trade. I didn't get out of the trade completely. I sold some at 30%, 32%,
Yeah.
but I didn't get out of the trade. I was saying that I'm going to stay in the trade. I could have just got out and took my 30% and been done with it. I
Right.
waited, and it reversed on me. I lost 20% on the rest of my capital. Nothing wrong with the trade, execution and risk
Execution.
management.
Yep.
So a lot of people, the mistakes they made, it's not the trade itself, it's the execution of the trade.
Mm-hmm.
Another trade I made, Cleveland Cliffs. We were very bearish on Cleveland Cliffs. I made 16% on the trade. Someone else in our group who executed way better than I did got 83% on the trade.
Mm-hmm. Mm-hmm.
So execution falls on you, and most of that execution is risk management.
Yep.
You
Yep.
can master that and stick to it. consistently, you will be better off long term.
Facts.
So
Facts.
that's my pointers for the week. It's you know the process of trading is not hard.
It's not hard.
It's not hard. It is
It's not
not
hard.
hard. It's where is the price going? Where do I want to enter? How much capital do I want to risk? You only really got two options: calls or puts. That's it.
Yep. Yep. Yep.
How you
Man,
you can get creative with how you manage risk with spreads and all that other stuff, but the risk management part lies on you. So
that is
master
a
master
fact.
that, you'll be all right.
Yep. We can't teach you how to manage your emotions. That's something you got to learn. We
No, you
can't
got to
teach you how
learn
to.
that.
We can show you how to manage your risk, but your execution
It's
at the
execution.
end of the day relies on you. And
Exactly.
one thing I always say is like the money in your trading account is not yours until it hits your bank account. That money is not yours until it hits your bank account.
Yep.
So consider that every time you trade. You know what I mean? Like
Every time.
if you leave it in your bank account, more than likely you're gonna use it.
Another
So
another example I'll give, I think I called out a QQQ trade from somebody in our group, and I was in NVDA. I called out QQQ and NVIDIA. They were both have this very similar setups, and he chose QQQ instead of NVIDIA. I think I made 55% on NVIDIA. His
mhm.
QQQ trade was up well over 200%
Yep.
because of
Yep.
his execution.
Yep.
Because of his
Yep.
execution. And I have learned that the way I like to execute my trades is that my goal is based on dollar figures. Once I see a certain dollar figure, that's when I start to sell. So I know my position increments. I know when I have a starter position, I know when I have a half position, I know when I have a full position and I'm tapped out. And
Hmm.
usually when I get to that full position mode, I start to get a little bit more conservative about when I want to start taking profits because again, I have more money at risk. The
Facts.
way I trade is the more money I have at risk, the less risk I take.
Mhm.
So that's for me is being more in the money rather than out of the money, more long dated calls rather than short dated calls. Like I'm not gonna do a max position on a Thursday and buy weeklies. No, that's not that I don't have the type of risk for that. Somebody
Mhm.
else might,
Yep.
somebody
Yep.
else might, but that's I have put certain parameters around how I want to take risk. And everybody has to, if you have to write it down and put it in
Put it
front of your
somewhere you can see it
computer
every
where you
day.
can
Yeah.
see it every day, do it.
Yep. Yep.
But you have to set those parameters yourself. So, you know, I yeah, I'll leave it at that. And last week, I mean, the market is negative, right? On the year.
Yeah.
There's two people in the group that sent me their year to date performance. One person is up 800%. Another person is up 400%.
Bro, that's crazy. But that's discipline though.
That's
That's
discipline.
discipline.
That's
Yep.
discipline.
Hmm.
I wish I was up that much. I'm not. I'll tell you that right now. Not in my trading account. Heck no. But
That
their
is
year
discipline
their year to date performance
on the
is
whole portfolio.
on the whole trading portfolio is 800% on one person, and another person's like 400%. And
That's what's up, man.
we're not even halfway through the year.
Not, nope. We're not even finished with the second quarter yet. That's
Nope.
amazing.
That's
That's amazing.
amazing.
Yeah.
So, you know, trading is not hard. It's not really hard.
Yep.
So you just have to
Discipline.
really discipline is the hard part.
Yep. All right, folks. Well, that's a wrap, man. Another episode of Wall Street Rundown is down. Please don't forget to follow, leave us a review if you found this helpful.
And
We'll be
subscribe.
and subscribe also. We'll be back next week. Until then, stay sharp, invest smart, and don't blow up your account. That's what I'm gonna say.
Oh, I'll also say this too. If you're swing trading things in this environment, you probably want to be a little bit more conservative.
Yep. Yep.
Unless you go in with the mindset that, okay, if it drops, I'm going to average down.
Yep. And give yourself some time.
Give yourself
Give
some
yourself.
time
Yep.
and give yourself the ability to average down.
Yep.
Like, I'll put that out there as well, because if you don't, I mean, days like today can really, really wipe you out.
Absolutely.
Yeah.
Absolutely. All right, y'all. Well, y'all have a good night. Have a good 3-day weekend if you're working. And yeah, we'll see you guys on Wednesday.